Welcome back to Switzer. You may not have heard of it, but the National Rental Affordability Scheme was established back in 2008 to increase the supply of affordable rental housing right across Australia by 2014. Under the scheme, investors buy new affordable housing and must set rents at least at 20% below the market price. But in return, they're guaranteed near zero vacancy rates and tax incentives. For more on why this might be something for investors, and I think particularly for self-managed super fund trustees out there to consider, I'm joined by Carol Croce, Executive Director, Community Housing Federation of Australia from Canberra, and Karen Karkas, the Executive Director of Residential Development Council of Australia. Thanks, Carolyn and Karen.
Thanks for having me.
Now,
Thank you.
Now, by the way...
It's going to be hard to keep us
apart. Now, Carol...
yes.
Because I was a great lover of, was it Tom Croce, the singer?
Croce,
yeah.
Yes, no relation, but you know how to say my name now.
But I got it right. Good, fantastic. Yes. Okay, now, who wants to answer the question? I'll let you put your hands up for this. What this is all about. For someone who has got no idea, in a nutshell, which one of you wants to explain what it's all about?
I'll start, Karen.
Okay.
I got me.
Sounds like a great plan.
The pushy Americans, see, Karen? Okay, go, Carol.
Great. What it is the NRAS, as it's known, is a funding stream that provides financial incentives to investors and community housing providers to build and rent housing, affordable housing. And as you said, you can rent it at, it has to be rented at least 20% of market rate. What you get back is a refundable tax credit or grant, probably the tax credit, equal to, at the moment, it's $9,500 per year for a period of 10 years. So that's a pretty good investment. And it's one, the management is often taken care of, the tenancy management is taken care of.
In Queensland, that's the case, isn't it?
Sorry, go ahead.
No, but I noticed in Queensland they are actually doing that, but it's not being done right around the country.
It depends on where you are. There are different organizations and different entities who've received the NRAS incentive, and they provide different management models. In many cases, though, they will provide tenancy management, and that's often undertaken by not-for-profit housing organizations, which represent my members.
Okay, great. Now, Karen, I'm thinking about the person at home. Okay,
sure.
I'm a self-managed super fund person. The government, at long last, has made it easier to buy property inside my self-managed super fund. You guys are coming out with this property offer. Now, one thing they might say, oh, this is public housing. What would you say to that?
Sure. Look, there's a couple things to be aware of. One, public housing usually has a cap in terms of what people can earn of $58,000. If you're looking at the National Rental Affordability Scheme and you want to put a house under that, you're talking about $125,000 income. Yeah. So the target of what they're looking at is they're looking at key workers, looking at nurses and school teachers and police officers. They're looking at families and over 55. So it's often what people are more comfortable with in terms of understanding the type of people they put in. Plus, remember, you get to select who goes in there. Your only responsibility is to make sure that they meet that income limit. So you're actually, it's the same as renting in the marketplace.
And also, you made the point, nurses and teachers and things like this. This was actually designed to try and get workers into areas where there's growth and a need for these sorts of qualified workers.
Absolutely, and really the situation is because we don't, housing is at a stage where it's unaffordable in those areas, but we need them in those areas. We need not to be busing them in for 2 or 3 hours away. We want school teachers and childcare workers in the communities that we live in, and that's very much what this is designed to do.
Now, Carol, I've looked in this before, and that's why I've got a few related questions I think that a lot of people would be thinking about at home. These areas aren't necessarily built specifically for your eventual clientele. You're mixed in with other people, aren't you?
Absolutely. Many times the buildings, the actual NRAS incentives are going into what we'll call, mixed tenure. You might have a block of 100 units that have been built. 20 of them may be with NRAS tenants, and the other 80 will be private rental, or they might be homeowner owner occupied. So it's quite a mix. But it's also interesting when Karen was saying about where we wanted to get the houses. About 2/3 of the housing that has been allocated under this program has been in major cities, and about 17% has been in regional areas. So it really has been targeted at trying to provide housing for those people who are just getting killed at the bottom end of the private rental market, and trying to make housing more affordable for them so they can be closer to where they work.
Yeah. Now, Karen, it must be a fantastic incentive for a landlord to know that at least you've got a 10-year deal, you're going to have a tenant that could be monitored by a government agency in some cases, but not always. But also, you're going to get $9,500 coming in as a tax rebate, effectively.
Well, absolutely. I mean, think about it in a financial sense. So say you're an investor and you purchase a $350,000 apartment off the plan.
Yeah.
So, and you rent it, and the market rent in that area, because it's based on what the market rent is $320 a week.
Yeah.
So you rent it out, 20% less than that. Over the 10 years, you're looking at $60,000 in taxable income savings, and well, $60,000 in tax-free money, but you're also looking at $600,000 in tax-free income.
Yeah.
That combination is really hard to pass up, especially with the changes in the law that now allow self-managed super funds to purchase residential or commercial property.
And also they can renovate it as well. But we are talking about new properties. But over a 10-year period, you may well want to add to it. You might want to put a swimming pool in the backyard or something like that.
Absolutely. And if you think about it, if you're going into a retirement mode, then, you know, purchasing it now and going through that 10 years means you can realise the asset at the end. So it really provides sort of that whole of life outcome.
Okay, now Carol, I feel insecure here saying really nice things about a government project, okay? Only because I've got history on my side. I am a financial advisor. So what can go wrong, do you think?
What can go wrong?
For a landlord who says, gee, Switzer's really talked this up and these two wonderful American girls have swung the story over, what can go wrong?
Look, I don't think there's a whole lot to go wrong. I suppose if the property, you know, it didn't appreciate, if you were trying to get most of your money out at the end of your 10 years through capital gains, and for some reason, you know, your property greatly depreciated. But I don't think that's very likely. There isn't really a whole lot to go wrong. At the end of the 10 years, you've got the property. It's private property. There's no government caveats on it. You're able to do what you want with that property. The only option that might be a little bit of a problem in it, if you decide that you want to get out of the scheme before your 10 years. And there are get-out clauses. You just have to sell it on to an investor who's willing to stay in the program, or you have to substitute it with another property of equivalent value that could then take up the NRAS incentive. But other than that, we never have a problem with demand. I mean, the Supply Council has said that we've got a shortfall of affordable housing that exceeds 200,000. So that's never a problem, and there's 1.5 million eligible households out there for this program. Yeah.
So is this program going to get bigger and better? Is government supporting this program?
Well, look, I mean...
Oh, sorry.
Sorry, Carol.
I did turn to Carol, but you can answer.
I can't see who you're turning to.
Okay, look, go on, Carol.
Go, Karen.
The government, you know, has been supportive of the programs. We've seen 50,000 incentives committed to, and 40,000 of them are out in the marketplace, with the potential to double that again. So the real big thing that we'll be watching in the next federal budgets will be whether or not they have that in their outgoing forecasts. I mean, and look, our learnings from overseas are the fact that this becomes very high in demand. We've actually had greater success in this terms of tax credit here in a shorter period of time than they did overseas when they were introducing it in the U.S. But the fascinating part of that is in the U.S. it's considered a virtually no-risk product. So it's really understood by the banking sector and actually sought after by developers as something that's really a no-brainer.
I'm
and
sure.
In fact, the program that this was based on the low-income housing tax credit in the U.S. And that program has delivered over 1.5 million houses and puts out about $5 billion a year in tax credits. So as Karen said, it's highly successful and very much sought after. Okay,
I guess the fair question some people would be thinking at home, Carol, would be the subprime issue. Did the subprime loans and the properties that were created get tied in with the equivalent US NRAS?
No, not at all. That was a whole, just like in this country, it's a separate program. It's geared, I think, towards a different client group. We're going towards investors here, and the investors in America started out as smaller investors, but has moved on substantially into institutional investors. So we don't have the same situation.
And I guess also a lot of people got themselves into trouble in America. We're trying to flip houses really quickly. In this case, you've got to be in for 10 years.
Correct. Yeah. And in fact, the equivalent in America is you have to be in it for 20 to 30. So, and they're happy to sign up even with those qualifications.
Yeah, Americans are investing in bonds at 1%, so we know they are very, very forgiving of investments. Now, here's a question for you. I'm sure a lot of people will be thinking, if you've got a situation where the government isn't managing the tenant, do you effectively either do it yourself or use a real estate agent?
Well, you can do both.
Can I take that one?
Absolutely.
Yeah. Thank you. I would say
she's pushy, isn't she? Go on, Carol.
I'm American. Well, I can't help it. A lot of the in fact, over half of the recipients of these NRAS incentives are in the not-for-profit housing sector, and those are then being managed by not-for-profit organizations like mine. This is our bread and butter. This is what we do. Tenancy management is our forte, and we also are the managers for many of those who are the for-profits who are managing these properties. So in most cases, you are going to get probably a community housing or not-for-profit who are experts in this field. We have very low vacancy rates. We don't have problems with arrears. So it's a very safe bet. In fact, I'd say it's safer than dealing with real estate agents, but that's the other possibility as well.
Okay, right. Now, Karen, if someone's interested, how many properties are potentially out there at the moment or coming online?
Sure, absolutely. Well, you're looking at a situation in which you've got 40,000 incentives that are in the marketplace. Yeah, all right. Some of them have already gone through, so you're looking at about 20,000 that have been committed. So you've probably got another 20,000 out there in the marketplace and another 10,000 following after that, just as a starting point.
Because my question is, if someone hears this, are they going to be disappointed because there's a long queue to actually get these things?
I think there's availability now in the marketplace, and it's certainly spread across the country. We have the last round of the National Rental Affordability Scheme saw takers across the country. We saw lots of grants coming from everywhere, from WA to Southeast Queensland and up the coast. So really, the opportunities are there, and it's certainly quite a good program. So really, what we'd like to see is another 50,000 out there, so that as people start to understand it and realize what a good deal it is, that there's more available for them to get involved. Okay,
Carol, and the website, where do people go to get information on this?
Information you can get from the government website at www.environment.gov.au, and over on the sidebar you'll see a column for housing supply and affordability. Click on that, click on NRAS, and you'll be able to get information, performance reporting, and you can also see a list of everybody who's received incentives. So that's where you can go to try and see what's available.
Yeah, and my great producer said you can always just Google National Rental Affordability Scheme as well.
Well, that too, yes.
This is a modern world, isn't it, out there? Girls, thanks for joining us on the program. Fantastic information. Okay, well, that's the show. If you want to read my thoughts each morning at the close of Wall Street, check out my website, switzer.com.au. And if you've got any questions for me or ones you'd like me to put to an expert, email me switzer@skynews.com.au or follow me on Twitter, and the handle is @PeterSwitzer. I'm Peter Switzer. Thanks for watching. I'll see you tomorrow night.